now we're going to be considering something, basically the rate of growth and how investors look at the rate of growth. There's this concept of a lifestyle business. And a lifestyle business is any business that's been around for a few years that is growing at anything up to 20% per year. Now, if you had IBM or Apple or something like that growing at 20% per year, General Electric growing at 20% per year, everybody would be just blown away because it would sound like a growth stock. And that's a wonderful growth rate. But 20% a year is not a very good amount if you've been around for 3 to 5 years. So if you have a business that's been around for 3 to 5 years and you're able to claim that you have an 18, 19, 20% growth rate, you're what an investor will consider to be a potentially great lifestyle business. And that whenever you hear that from an investor, what the investor is saying is, it's for your life. You can have a nice lifestyle, but I'm not putting any money in your business. And the reason is because investors are not typically interested in businesses that are only growing at 15, 18, 20% a year. Now, 20% is not bad. When you get into the 20 to 50% range, that's considered sort of mid-growth. And you're going to start to really pique the interest of investors. And it depends upon how far along you are and how big your numbers are. If you've got a $100 million company and you're growing at 30 or 40% a year, you're actually a pretty interesting company. If you got a $100,000 or $200,000 revenue company and you're growing at 30 to 40, 50% a year, you're not very interesting to investors. Okay, so, but they'll pay attention to you. They'll watch and see if that continues, because after another couple of years, the numbers start to look pretty good. Investors are looking at businesses that have the opportunity to grow at in excess of 50% a year. And when you're in a business that's been around 3 to 5 years and you're consistently growing in excess of 50% a year, investors are going to really take strong notice of your company and want to know and watch what you're doing. They may not be ready to invest, but they might be ready 6 months or a year or 2 years from now if you continue your growth patterns. Now, these data points are from the Goldman Sachs 10,000 Business Workshop Initiative, which was going on a couple of years ago. It actually is almost identical to this class, except it was put on by Goldman Sachs. The information we cover in this class is almost identical to the information that was covered in the Goldman Sachs workshops.